All right, if I'm the US hegemon now, all right, I want to institute policies that I want to secure the energy infrastructure across the Middle East for my profit.
Do you think Trump will hold to that, or is he going to take a step back to just say that, okay, this is how the world economy responded?
Just conscious of time, I want to come back to your point about the real economy and US debt. And we were having a chat off camera about the real intention or the real reasons why Donald Trump and his administration has introduced these dramatic tariffs worldwide.
Yeah.
Do you want to? So I produced a video about this earlier in the week, and essentially, what's likely to happen is rising inflation, combined with a slowing economy, not just in the US but potentially globally.
Yeah.
But this could be good because.
Okay. I'll come on to that. I'll promise you, I will definitely come. I want to come on to that. Okay. But I want to put it in context of the conversation that we're also having today. Okay. Sure. I just want to cover off in terms of the Waqf, the nature of philanthropy trusts. Okay. Waqf, the nature of the Waqf has been unbelievably positive for the most part of Ottoman history and also for the most part of Indian subcontinent history, particularly during the Mughal period. Like I said before, okay, the social welfare system was near enough non-existent in relative to what we actually have today, okay? And society at that time, when we were dealing with vulnerable people, vulnerable communities, it was a community that stepped in. And they created these incredible infrastructure to deal with a whole host of social problems, okay? They were directly contributing to dealing with matters around poverty, okay? Loss of life, paying for funerals, okay? Not being able to feed your children, okay? Divorce, okay? And now you have a young lady who lost the main breadwinner in the family, and you've got young children, okay? There were institutions, and those institutions had to be under the auspices of something that led to some greater good. And that greater good was this relationship with this divine, because bear in mind, this notion of secularism and atheism, agnosticism is very new. It's only in the last couple of hundred years we're actually seeing that. Prior to that, for a millennia plus, God has been the center of practically every single society around the world, whether it's in Europe, whether it's in Indian subcontinent, whether it's even in China, whether it's in New Zealand, whether it's in North America. There's this notion of the sacred and the divine that has led to a moral urge. Having said that, humanity is corrupt, man.
Yeah, of course.
We do a whole load of nonsensical stuff, okay? And we want to profit, some of us, at absolutely any cost, and we don't care.
Well, those wedded to capitalism, yes.
Exactly, and this is when now we can go into...
Now we could talk about USA.
We can go into real economy.
Just to round that off, because it just adds to the point about the divine being just, but it's human beings that seem to cause the issue. There's a verse at the end of the second chapter of the Quran where it says that God does not impose a burden more than the person that can bear it. Correct?
Correct.
But then I pose the next question is that why do human beings pose that burden? It's not God, call it nature, call it karma, but for the sake of this discussion, God. He does not impose that burden, but it's often the case that other people impose that burden
Dude, man, we put burden on ourselves.
And Trump does burden on all of us with his tariffs, doesn't he?
Well, the thing is, there could
I'm
be...
segueing for you here.
Yeah, no, well, there could be a madness to a science to his madness, okay? And President Trump, with all due respect, okay, you can't lay everything at his feet. Okay. Yes, he's a representation or the figurehead of the US political and economic system right now. But our democratic institutions, okay, or our sovereign institutions have been cultured for several hundred years. Okay. So it's not necessarily Trump himself. Okay. The US is in what, 36 trillion debt. Mm-hmm. Their goal isn't right now to deal with the capital debt. Their goal right now, where they're racking their brains, is how on earth are we going to meet the bloody interest payments? Forgive me, I really dislike swearing. How are we going to deal with the interest? How are we going to deal with the interest payments? Okay, so when I've been reflecting over this in the last few weeks, okay. All right, especially the recent so-called Liberation Day. Heaven knows who's been liberated. All right. So Trump has put a whole load of tariffs on some of the closest, or practically every country in the world now. Mm-hmm. All right. I think the UK is at the lowest tariff rate, 10%.
Which is still significant.
It is, no doubt it's significant. Also for the audience, okay, and especially for the American audience, all right. This is not a tariff that the UK is going to be paying. It is a tariff that US businesses actually have to pay when they decide to import products in from the UK. All right?
And the consumer.
Yeah, no doubt. The consumer will could effectively be affected by virtue of the price of the goods and services increasing by 10% plus. Okay, but the science to his madness could be, all right, bearing in mind US debt is at 36.7 trillion right now. All right, inflation just rockets up. Okay, then what impact could that do to US bond markets? All right, because the Federal Reserve could actually step in at that point and reduce interest rates. Mm-hmm. Okay, so
just to clarify, reduce interest rates not to tackle inflation, but to tackle a slowing economy.
100% right. Okay. All right. So traditionally, what do we do? All right, in a high inflationary environment, okay, central banks they
increase interest rates.
Correct. They increase interest rates to make the cost of liquidity, the cost of taking on debt, a lot more expensive. Yeah. All right, so hopefully it brings things down. But that's not necessarily the case when you're dealing with a stagflationary environment. So when you're in a stagflationary environment, what that means is you've got no economic growth. Okay, it's a stagnant economy.
If this happens, and the interest rates start to come down, that will start pushing inflation. That's a push on inflation. So would it go potentially even higher than projected?
So I haven't been able to think that far ahead. Okay. But bear with me. Okay. Bear with my train of thought. Okay. So for the purpose of for the viewers as well, in terms of stagflation, what is that? You've got a stagnant economy coupled with an inflationary economy as well. Okay, so the cost of products and services are increasing, but the country isn't producing enough products and services.
I'm the viewer. I'm financially illiterate.
That's true, but you're
talking to me.
But dude, you are one of the smartest people I've ever come across.
Well, a lot of people beg to differ. The thing is that part of the problem that I find in this day and age is the financial illiteracy.
Correct.
I'm getting my head around about how interest rates affect the economy when things go up. But this is part of the issue, is that for Joe Average, hit him. This is why when you alluded to businesses will be paying through the nose, I said, well, what about the average consumer? Will they be paying through the nose as well?
Yeah, no doubt,
Well,
but it's going to be worse.
Will pass on the costs.
Yeah.
Correct, but it's going to be, I think it's going to be worse, okay? But let me just finish off the science to Trumpian economics, okay?
Yeah.
Okay.
So let's say Federal Reserve cuts the interest rates, all right?
Okay.
And the reason why they want to cut the interest rates is because they need to, because the US wants to bring back manufacturing to the US, right?
Yeah.
That's the reason why he's doing all of this. So if manufacturing jobs come back to the UK, they need a lot of help.
Come back to the USA.
Come back to the USA, they need a hell of a lot of help. And how are they going to get that help unless they get a cheaper way to actually borrow money? Now, in that regard, all right, they bring it back to the UK, they invest into the infrastructure.
US.
Sorry, invest into, did I say UK again?
Yes.
Right, invest in US infrastructure,
Sure.
okay, to build up their distribution and manufacturing base so they can potentially compete in international markets, okay? Now, then you've also got the issue of maybe it's also about refinancing the US bond market, okay? Because right now the interest rates are really high. But what if interest rates went down and then US bonds could be refinanced on a lower interest rate? That's another thing that I'm thinking about, and I've not come across anybody speak about that.
Sorry, just to clarify, if the interest rates come down, the yields in the US bond market will also come down, depending on the term.
Yeah.
And then that positively affects the US debt burden?
Yes, because it's cheaper debt.
Okay.
It slows it down. It slows it down, you mean?
No, that's you're mixing two different things up. We've got debt here. Debt is securitized debt, so treasury bills. Okay.
Yes. Yeah.
All right.
Government debt.
Government debt. All right. What people don't realize is government debt, okay, is effectively something that can be traded. So when the government needs money to fund public services, all right, and there is a deficit, okay, they bridge that deficit by issuing what we call bonds. In the UK, we call it gilts.
So how much of the US debt are bonds? What percentage?
I don't have that figure. I don't have that figure.
Get it then.
Rajesh, see if you can,
I'll
see if
do
you can
some
look at
quick
it.
research
But
in the
in terms of principally, all right, what you can say is the debt we know is at 37 trillion. That's no small amount, right? Now imagine 37 trillion is being charged at 5% interest rate. It's not right now. It's probably like at something like 2% or something. But if that debt was to go to 3, 4, 5% interest rate, that means the US needs to be producing sufficient value in its economy to be able to pay that interest rate, right? So now imagine if the US has an opportunity, look, we don't want to be paying 4, 5% interest on the debt that we have, a capital debt which is at 36 trillion. Okay, what if we could get that down to 1.5%?
So just to clarify, 36 trillion is the total amount of US debt, of which 29 trillion is held by the public. So what that means is that 29 trillion is treasuries, US bonds.
Correct.
Essentially.
That is an
That's
astronomical amount.
When you say by public, who does that refer to?
It could be pension funds. Okay.
Significant portion of that is actually China.
Yep.
Other countries holding US debt.
Yeah.
Okay.
Yeah.
Let me get a breakdown of that as well. I'm interested to look at.
All right. I'd love to also end up talking about the China link as well, which is another thing. But
because a lot of people, again, I'm the public who doesn't know jack about finances.
Yeah.
Even though I did a maths degree, I'm like Gary Stevenson, where he says, "I did maths and economics at LSE. I did a maths degree."
I like Gary Stevenson a lot.
He keeps sticking. It's almost like he's trying to say, "Look, I am qualified." He's kind of I don't know. It's probably an insecurity to say that. I know what I'm talking about, but So I can do the maths. But often is the case, and when people associate debt for the average person, they say it's taken out a loan or a mortgage. Bonds operate differently.
No, not necessarily. Not necessarily.
Suppose, could you sell if you take a loan out or a mortgage
that's
out,
the
could
difference.
you sell that?
No, that's the difference.
That's the big difference.
You can securitize a mortgage and then sell it, which is what happened during the financial crash.
Yeah.
When all these big banks took all these bad mortgages, put it in a nice product and sold it to us essentially.
Exactly. And you had corrupt credit reference agencies saying junk bonds were effectively had a very high credit rating. Mm-hmm. Okay, so when you as a wealth manager or an investor, sorry, not an investor, as a wealth manager who's looking after your clients who are the investors' money, and you have to do all your research, then you're saying, look, in your portfolio, we're going to put 20% in these bonds that are A-rated or AAA rated. All right, AA rated. Okay, so you're doing enough due diligence to actually say, all right, these are good bonds. They're solvent. When the term of the bond expires, you're going to get your money back, Mr. Klein. Following? That's not what happened. So the credit reference agencies, they gave us a whole load of rubbish information. Yeah. Okay. Whereas it wasn't AAA rated. They were junk bonds. Okay. They were E, F, G, Z. All right. So then when the bonds end up collapsing, then you had so many people just lose all of their monies because they didn't get their monies back. The loan that they gave the government and all of these institutions, they didn't get that money back. In the financial crisis as well, it wasn't necessarily a loan to the government. It was mainly a loan to corporate entities. So this is what I'm saying. You've got corruption throughout different levels of society, okay, for the sake of what? Profiteering.
So
that's where regulation comes in, man. That's
where I see Trump, he seems to be the type of person, president, where he is pushing the envelopes, whether it's in immigration, whether it's in the tariffs. He's always seemed to say, okay, let me see how far I can push it. Yeah. And then how people respond to that. So he's throwing out all these tariffs all over the world. Do you think Trump will hold to that, or is he going to take a step back to say that, okay, this is how the world economy responded?
Yeah. I think it's too early to say, all right? But you did highlight a very, very important point just there, especially in relation to US standing around the world and his own policies in respect of immigration in particular. All right. Right now, in terms of what's going to drive the economy, okay, you need labor to drive the economy. If you're in a country where you cannot have, or you do not have, sufficient skilled labor on your doorstep, at your disposal right now, nor do you have a policy in place that will encourage births, who will then lead on to going through a good educational system in a secure environment in that particular country to create a wholesome society that can then in 20, 30 years time have a dramatic positive contribution to your own economy. Okay. What option do you have but to encourage immigration to come in?
Yeah, I think it's quite baffling how, especially when you talk about the rise of populist movements in America and Europe, is that they don't seem to learn the lessons of history. This is the whole point. My whole research is to look at history and to learn the lessons from history, and then to rectify the steps to make sure improvements can be made. If you're going to look at the case study of like Idi Amin in Uganda in the 1970s, there was a huge, very, very vibrant Gujarati Indian community, very, very entrepreneurial. But then Idi Amin kicked them all out. Majority came to the UK. What happened to the economy in Uganda?
Yeah,
And
went down, man.
all that entrepreneurial spirit came to the UK.
Yeah.
And this is the point, is that if you're going to take out the immigration workforce out of the UK,
Yeah.
who's to say that history's not going to repeat itself?
Yes, so you're 100% right there when you look at it from a microcosm.
Yeah.
Okay, but let me be devil's advocate. Okay, it's the 1990s now,
Okay.
and I'm the hegemon. I'm US. Okay, and me being the hegemon at the time, I'm seeing all of these social domestic trends that are happening. I'm projecting forward. I'm thinking, do you know what? We're not going to be able to retain our hegemonic status if we don't exercise X, Y, and Z policy. And what could those X, Y, and Z policies be? Okay, are we going to build global infrastructure and institutions? Okay, or and then create what we call multilateralism? Okay, or do we want to take a unilateral approach to the world? Okay, in order to retain unipolarity as opposed to multipolarity. Now imagine
countries always act in their best self-interest.
Men act
Men,
in their
yeah.
self-interest.
I mean,
Okay, women can act in their self-interest. All right,
humans in general.
Humans in
I mean,
general.
this is a repetitive cycle through history.
It's true, but what is the economic cost of being a? Oh my God! Forgive me.
that out.
All right, got to delete this one. All right.
Muhammad!
Forgive me.
Your name is Muhammad!
Forgive me. All right, no. So, it's the only reason.
It's not. It's haram.
No, forgive me. All right, but the point that I'm trying to make, right, is look. If you're bad at business, if you're you're right. I've screwed up my thought, man. All right. Ultimately, the point that I'm trying to make, okay, is if you are unethical in your approach to conduct with other human beings or within your business-to-business relationships, okay, that is going to have a diametrical impact on the evolution of your business. Now, you may receive profit and growth over the short term, but you're destroying the foundations, okay?
Yeah.
You can only build resilient foundations resilient pillars upon a foundation of integrity.
That's a beautiful notion, but a lot of people will probably say, this is the point, is they're talking about this moral core of integrity and humanism.
No, it's not that. No, sorry, Shah. No, it's not that. All right, no, look at it this way. Okay, so you had in the 1990s where the US took a unilateral approach.
Fine, okay.
All right. So what could that entail? All right. If I'm the US hegemon now, all right, I want to institute policies that I want to secure the energy and gas infrastructure across the Middle East for my profit.
So there's that self-interest with the state.
There is that self-interest.
Okay, fine.
Okay, all right, but has that succeeded? All right, let's say when the US went into Iraq, they won. Okay, they took over the Iraqi oil fields. All right, when they went into Afghanistan, they took over the gas fields. All right, imagine they won those two theaters and a plethora of many more. US would have its unipolarity today.
Okay.
But that's not what's happened. What's happened is they went in, yes, they temporarily achieved their war objectives, okay, but they ultimately failed. Now, because they failed, they've got this behemoth of national debt, right? It still needs to be serviced. So what option do they have? What option do they have than to go now against my own allies? Remember, I'm the US hegemon.
Okay.
Super interesting. I think.
But yeah.
I think. Sorry, just to correct what I said earlier. China only owns 2% of the US national debt. The biggest owner, funnily enough, is itself. You can see that on the graphic. The Federal Reserve owns 15% of the US national debt. I'm trying to get my head around that a bit.
Because the Treasury is a distinct entity from the Federal Reserve.
Right, okay.
They're two different entities.
So they're issuing between each other.
Correct. It's
But it's making the problem worse.
So in a
No
nutshell, what's the difference between the Treasury
yeah.
and the Federal Reserve?
The Federal Reserve is effectively
The government?
privately owned and run. It's the Federal Reserve that provides the liquidity to the US government, which is the US Treasury.
Yeah.
Okay? That's the distinction. It's not the other way around.
But they're kind of they're on the same team, so to speak.
They're supposed to be on the same team, but this is where infrastructure of situations like this can also lead to a whole host of structural problems in terms of governance. Okay.
But when for example, when this all comes to a head, because it will all come to a head, as it has done in the past with previous empires, can the Treasury write off its debt to the Federal Reserve? Because sure, they're not on the same team, but they are.
No, yes, 100% it can. But
what happens in that situation?
But it's not as easy as that.
Yeah, surely there's global market turmoil.
No doubt, man. Because if that happens, that's going to have a dramatic impact on the US dollar.
On the rest of it. Yeah,
correct. It's going to, and bear in mind the US dollar remains as the reserve currency for most of the world, right? Okay. But having said that, okay, if you want to understand geopolitics, okay, and I'll end on this one, all right. Military policy, all right, is an extension of foreign policy. Foreign policy is an extension of economic policy. Economic policy is an extension of domestic policy. And you then have the thread of eschatology running all the way through that. And I'll end on that.
So just to clarify, what is eschatology?
Shah, man, you go for it.
Good.
All right.
Come on, you put me on the spot like that. It's a study of, like, to put it simply, life after death. But it's not just life after death. It's supposed to be like this, the study of, like, Armageddon, end of times, what happens towards the end of times, as they call it. There's different interpretations within the Christian traditions, and there's different readings from the Islamic traditions as well.
Yeah, and also within the Dharmic tradition, the Vedas tradition.
Within the
as well.
Vedic tradition,
totally,
as well.
and it's not too dissimilar, in fact, from the Jewish and Christian traditions. If you actually really do go into it, but maybe one for another podcast.
This one.
There's a perfect
perfect
place to end on eschatology, the study of things finishing.
So when we started this podcast, right, we didn't think we're going to be talking about the end of days, man. So maybe one for another session.
Shah, thank you for coming on the podcast.
Thank you for
We need to have you on again because this has been fascinating.
Yeah. Just testing the water, but I've got so much to talk about, and then you end it here.
Shah is a very important addition to the team. Okay.
Yeah, so no doubt.
He's going to be involved in a whole load of different projects. We've got some exciting stuff happening. So yeah, watch this space. This is not going to be the only podcast that Shah is on. We are going to be privileged to have Shah on many more podcasts down the line.
Thank you.
Thank you.